hope that's working right. Make sure I'm recording the screen. I hate when that happens and then y'all can't use it. Because at least you can fast forward the parts you don't want, even if it's long. All right, cash flows.
Yeah, it's recording. Okay, hold on.
You're coming through too. All right, good deal. All right, so we got these done, didn't we? Fill in the blanks on these, like determining which part it was. I thought so. Okay.
Yeah.
I got to do a better job of writing in there where we get. All right, so part 2. Y'all should have these filled in as well, but we'll just go through them. You're supposed to do this for homework. All right. So we're going to look first. There's 3 sections to this cash flow statement: operating, investing, financing. We are going to look at them one at a time. So the first one, and the one that's the most involved, is the operating activity section. All right, so the indirect method, they use the logic that a change in any balance sheet account, including cash, can be analyzed in terms of changes to other balance sheet accounts. There's no order that we have to look at the balance sheet accounts in. We don't have to analyze them in any specific order. We'll look at net income first. It's the first amount reported. We're not really going to look at it. We're just going to report it first. Retained earnings is normally the first account analyzed because net income goes in there. Very important that you remember, net income does not equal net cash flows from operating activities.
Are those the sheets I read?
Uh-huh. This last copy just for
Great. Thank you.
yeah, want that. I took that. Did you put it in there?
I took that one down.
Yeah, I took that one. They're just starting to get wobbly and
I just couldn't see through it.
yeah, some people want them, some don't. I'm kind of tired of it. I'm kind of over the whole. All right. So remember, when we get to the bottom of this operating activity section and we have a net cash flow for that amount, it's not the same as net income. It's not going to be the same total. All right, that's because we're on the accrual basis where we recognize revenue and expenses at different times from when the cash comes in or goes out. You can do it that way. You just look sleepy. You just look like you're.
I took a feel for the.
Oh no, did it make you sleepy? Oh, was it Benadryl? Oh Lord, he may be out for a while. All right. So we have to make adjustments to net income for anything that's not cash. So if you have a customer who has, you got a customer who's charged something on account, like you've done some work for them or you sold them something on account. I mean, remember the way net income works. We've got revenue or revenues minus expenses equals net income. So if you've got a customer that you billed but they haven't paid you yet, you're going to have that revenue in there because you're going to debit accounts receivable, credit sales or fees earned or whatever to show that you have earned that revenue. So that's going to be in this revenues number, which will make your net income number larger, but you haven't collected the cash yet. So remember that the whole goal, because this is different and it's kind of confusing, the whole goal to this report is to figure out how much cash went in and out, okay? So we've got to take our net income that's on the accrual basis and figure out what all went through the books that was a non-cash thing. So if you had a customer that charged on account, it's going to be in your revenue, so it's going to be in your net income, but it's not cash. You ain't got it yet. So that's one of the things we're going to be looking at. All right. A lot of this here is just notes for you. Remember, revenue is reported when it's earned. Expenses are recorded when they are incurred or when they occur. So your cash may or may not have either been received or paid out yet. And this report is strictly looking at cash, the movement of cash. All right, this you need to like dog ear or whatever in your notes because this is going to be huge to you to refer back to. It's a huge help. it is a template of the operating section of your cash flow statement. But when we start getting into it, this will tell you, okay, if you've got a problem for homework and you're like, I can't remember whether I add that or subtract it. Well, go here and look at this and it'll tell you what to do. So you're going to probably get confused. I mean, it's just different. So take advantage of this. All right. The first two steps we're going to look at, and then we'll move on to step 3 and some other problems. But we're going to add expenses first that don't affect cash because they're decreasing your net income. But if you have not paid for those in cash, then you need to add them back to determine what cash is. It's hard to explain. I'm thinking this is probably going, because for me, it took me forever to grasp the whole cash flow statement thing. It just didn't, my brain was not wanting to wrap around it.
So like the first step is talking about like would depreciation be in there?
Definitely. You've got depreciation expense in your net income, but you didn't write a check to pay for depreciation expense. Depreciation expense is related to stuff like equipment. So you would have had cash outflow when you bought the equipment, not when you record depreciation. And that's going to be something on the balance sheet. It's not even going to be in net income. So let's look at the first problem here, just to kind of see how this works. Omega Corporation's accumulated depreciation for equipment increased by $10,000. So if their accumulated depreciation increased by $10,000, what's the other side of that? How would you get accumulated depreciation to increase? Debit depreciation expense, credit accumulated depreciation. It was one of our adjusting entries that we learned at the end of, I was about midway through counting 1. So it's an adjusting entry. It's something you're going to record every year. It's showing the normal wear and tear on the stuff that you're using. And that's how you end up getting the benefit of, and I say benefit for tax purposes, so that's how you're going to show, okay, we paid for this asset, but we are using it in the process of making money. So we're going to expense it through depreciation expense. But you're not writing a check for depreciation expense. So when it tells you that accumulated has increased, that's what that means, depreciation expense. $2,700 of patent amortization was recognized. I don't know if we even did any intangibles in here in accounting 1. But amortization is like the equivalent of depreciation for things that a patent is something that's a right. It's intangible. You can't touch it. You might have a piece of paper that backs it up, but you can't really touch your right to this. You know what I'm saying? There's some things you have that are worth something, but they're not something you can actually put your hands on. So you amortize those, but you're doing the same thing. You're taking a little bit of that cost over a period of time to show that it's losing value. Because a patent's only good for a certain amount of time. So you would amortize it over those number of years. You take a little bit of expense every year until the patent expires. All right, so the problem says no purchases or sales of fixed assets or intangible assets during the year. Income statement showed a gain of $3,200 from a land sale. Well, since they had no purchases or sales of fixed assets, I'm just going to assume that gain must be a piece of land they had for investment purposes or something. But remember, the gain is not cash. Anytime you have a gain or loss on anything, we're going to show it in the operating section. All right, so we start with net income. They're telling us it's $64,000. So that's the first thing you're going to show. And this is the first section on the statement of cash flows. All right, so we start with net income. All right, so we have depreciation expense of $10,000. Do you think we'd add it back or take it away? We're trying to get back to cash.
Take it away.
Well, it's already been taken away. The $64,000 includes depreciation expense. So you want to add it back because it is not a cash. Remember, we're trying to get back down to cash. I know it's strange. This is not my favorite. This is not my favorite chapter. We're going to add it back. Because think about it kind of like this. Let's say you've got, $10,000 in revenues. You've got, maybe you've got wages and you've got all this other stuff, and you've got depreciation in here. Let's get 100. It's kind of hard to do hypotheticals. So let's say you had 100,000 in revenues, and everything coming out of here is like your wages, utilities, and one of those things would be that 10,000 in depreciation. Let's just say we came back to 64. And we have other stuff in there, but that's what we came back to. So your depreciation expense has already been taken out. That 64 is net of depreciation expense. Does that make sense? I feel like I'm not explaining this very well. Anybody like totally lost? Did you take Benadryl too? You're just sleeping. Amortization of patents. That's another one of those. We're not going to write a check to amortization of patents. It's just a book number. You debit amortization expense, you credit patents. So there's no money going out. So we don't want this reducing. I'm going to add it back. Again, we're trying to get back to how much actual cash came in and went out. Essentially what we're doing is converting from the accrual basis to cash basis just on this statement. I remember accruals got stuff in it that we haven't collected or paid yet. All right, gain from sale of land. Now that gain is showing up is it wouldn't, on this one it wouldn't be plus 64, but just remember that a gain is adding. So your net income is going to have a gain, and it's not phantom income, but it's not cash income. That makes sense? So what we do with that gain? Subtract it. And again, y'all, if all else fails and you don't know the answer, go back to page, what is that? Go back to page 5 and look. Okay, so you've got net income you start out with. What do I do with depreciation? I add it. What do I do with amortization? I add it. What do I do with losses? I add those, but gains, I subtract. It's just right here. Just look at it. This will give you your answers right here. So I'll put it in there. All right, so we're going to subtract out that 3,200. All right, so if we take 64,000 plus 10 plus 2,700 minus 3,200, we get 73,500. So what this is telling us is from our operating day-to-day activities, we had a net inflow of cash of 73,500. That's what you're getting. All that trouble. That's what you get. Makes sense? Moving on. All right. Y'all look at this one and see if you can get the right answer on it. Don't hesitate to use page 5. What you want? And that's really not too bad. When we start looking at the changes in the asset liabilities accounts, it's more.
So if we have a loss on the Excel one would be the data.
You would. Because it's making this number small. It's making net income smaller. A loss would. So you want to add it back because it's not a cash representation. All right. Y'all good? All right. So on the next step, we're going to add on to what we just did. So we're going to look at what's a non-cash asset.
Land.
Yeah, just in general, anything but cash. So yeah, so your non-cash current, which would be anything used up in a year, operating assets, and your non-cash, liabilities are not cash. Your current operating liabilities, that's the ones we're looking at. Here's some examples. We're not using cash because we're looking at non-cash. That was my first thought, is why don't I have cash listed on there? Because we're looking at non-cash. Okay, so this gives you some examples. There's others, but these are the ones we're going to kind of be focusing on. So let's look at how that works. So the first thing you have to do is look at the accounts. We've got the end of 17, the end of 18. So we need to figure out, did each account increase or did it decrease? So accounts receivable from 17 to 18, did it increase or decrease? It increased $2,100. Okay, so what about inventory? Did it increase or decrease?
Decrease.
Okay, so inventory decreased $4,200. Accounts payable, up or down? Increase or decrease?
Decrease.
Okay, now, just because you have something showing as positive here doesn't mean you're going to come down here and show it as positive. Same thing with the subtraction plate. I'm not going to pick on these. Some people owe it. It's usually free. I have actually slammed a book down. Was that you I did that to?
No, it was that, it was the guy on the personal financial management.
Do it, let me videos.
That's right. He ended up making it. Yeah, but he was bad about that. He fell asleep every time. So it's like, wake up. All right. Just because you have a positive here or a negative here, it's not necessarily going to translate to an addition or subtraction. We have to think about what's happening. All right. So net income is $109,000. So let's start there. Remember to look back at page 5. You're going to have that reference to help you. Unless you notice, you can, I'm going to give you the logic behind all this in a couple of pages, but the first thing we've got here is an increase in accounts receivable. Okay, what increases accounts receivable? How would you get an increase to accounts receivable? You would debit accounts receivable and you would credit sales or fees income or whatever, fees earned. So if you do that, you've got an increase in your revenue that's increasing your net income, but you don't have the cash. So if you have an increase in accounts receivable, it's not cash. So you're going to want to subtract that. Does that make sense? Or look at page 5. Increase in accounts receivable. This thing does not move as fast as I would like for it to. Okay, so this is where this kind of comes in as helpful. All right, so we have an increase in a non-cash current operating asset. We have an increase in accounts receivable. So follow the line down. Increases in accounts receivable will subtract. I mean, this thing is like super helpful. If it had decreased, we would be adding it back. Because accounts receivable is going to decrease when you collect money. So think about it like that. All right. All right, so we have a decrease in inventory. So how are we going to treat a decrease in inventory? Will we add it or subtract it?
Add it.
Okay, we're going to add that back. The theory here is that if you decrease inventory, the offsetting debit would be cost of merchandise sold or cost of goods sold. That's going to be an expense. That's going to make net income smaller. But when you have a debit to cost of sales and a credit to inventory, there's not cash as part of that entry. You paid for that inventory some time ago. So that's why you're adding it back. You've got an expense on the income statement that's not a cash expense. I know this is a little much for the last end of the semester. All right, so you have a decrease in accounts payable. What would you do with that?
Add it.
If your accounts payable is going down, you're going to debit accounts payable, credit cash. The expense affected net income when you incurred the expense, not when you paid it. I don't know, it's a lot.
Well, it makes sense because accounts payable has, like, that's easy to remember because accounts payable has a different loan balance
Right.
than accounts receivable and inventory.
Yeah, and you treat them opposite of, yeah.
So
If you
that's
can
easy.
remember all that.
That makes
I
sense.
mean, I think page 5 is going to be something you're going to have on your cheat sheet. Okay, so if we total all these up, we come back to 110 for net cash flows. So what this is telling us is we had 109,000 in our net income, but when we added back and took away anything that was not cash related, we came back to 110,400 cash that came in from day-to-day stuff. Okay, so let's look at another one. All right, on this one, did my accounts receivable go up or down? Did it increase or decrease?
Decrease.
It decreased $4,700. Okay, what about inventory? Increase or decrease?
Increase.
Okay, what about accounts payable?
Increase.
And then dividends payable, up or down?
Down.
Down $12,000. All right, $285,000 in net income is where we're starting. All right, so the first account, we have a decrease in accounts receivable. So we'll write that description out on the line. So we're going to add this back or take it away?
Add it.
4,700. Yeah, because if your accounts receivable goes down, you've collected the money from the customers.
I think what would help me remember is like if I'm looking at it on the test to maybe just like write the normal balances for each of the accounts, like debit, credit, like next to it, so I know how to look at it.
Yeah, and just think about what it took. What kind of entry did you have to record for this to happen? And remember, this is like net for the whole year, all the ins and outs, you ended up with a net decrease. So you had more collections than you had charges. So it's a whole year's worth. All right, what's the next thing? Increase in inventory. All right, and it increased 2,400. So are we going to show that as a subtraction or an addition?
Subtract.
Because when they bought the inventory, they paid for it, you know, ultimately. So, all right, what about the increase in accounts payable? If our accounts payable increased, we've got expenses recorded we haven't paid for yet. So what will we do with that?
Add it.
Add it. All right, and then the last one is a decrease in dividends payable. So how do you decrease dividends payable? What would be the entry to decrease your dividends payable? We just did this. couple of chapters ago. You would debit dividends payable and credit what? Cash. If you're paying dividends out, if they're cash dividends. Okay, so adding all this up, you get 277,600. So, I mean, you can see net income and our cash flows from operations are not going to be the same. And we're saying net cash flows, or net cash flow rather, from operating activities. If it was a negative number, you'd say used for. We just don't see that in our problems as much. Okay. Turn the camera on. All right, so the rationale behind this, why would we do this? Why would we subtract increases and so on? I've kind of tried to write it out, an explanation for each one of these just to help you understand why we're doing what we're doing. So, you know, if you're having trouble through and kind of look at those, clear it up. All right, now we're going to do one where we're putting all of it together. Okay. So we've got net income, depreciation, a loss, and then we've got some changes on some accounts. They gave us the changes this time, so we don't have to figure those. All right, so our net income is 165. So the next thing we're going to do is depreciation expense. We're going to address that. Do we add it or subtract it? Come on, Holland, you know. Do we add it or subtract it? Remember, you're taking net income and converting it to cash. So you,
I don't know, 50% added.
that's right, 50-50. You got an even chance of getting it right. So yeah, add it back. You can make it. Take it out. I don't care. You don't ever do that. I mean, I know you'll get it. It's fine. You can go back and watch the video. I mean, you're always paying attention. Get that tired, go to sleep. I used to have a student at 8 o'clock who had worked all night at the post office in the distribution center, and he would come in here and just die. But he was like really sharp, so I knew. I mean, I just let him sleep, whatever. He always had, you know, almost perfect grades. It's like, go to sleep. It's fine.
Where's this guy?
I don't know. That's unusual.
He's been kind of quiet.
He's stressing. I mean, he's got a lot on his plate. You know, I think everybody is just sort of snowballing towards the end of the semester with assignments due and all that, and it's just stressing. Maybe sick. I don't know. I didn't hear from him. Usually I hear from him, so I'll check on him. Loss on disposal of equipment. Will we add that back or take it away?
Add it back.
We add it back.
I'm here.
Oh, no, it's okay. I don't care. Just checking on you. All right, 8,000. We're going to add that back. What about an increase in accounts receivable? What we do that?
Subtract it.
We're going to subtract it. And what about a decrease in accounts payable? We're going to subtract that too. Okay, y'all got to heavily rely on your page 5. Except for this one, he's back got it.
Yeah, I know this.
Huh?
I'm kind of confused on this.
Yeah, I know. It is confusing because you're like, why am I adding this? Why am I subtracting it? That's why I wrote out a lot of that, you know, on previous pages. Why do you do this? Because remember, it's kind of backwards from what we're used to doing. I mean, when we're not used to adding back a loss, that's supposed to be something that comes out. But we're trying to take our net income and we're trying to get back to cash. We want to convert that net income back to cash. It's just foreign. It's just different from anything you've done before. It is confusing, so don't let that throw you too much. All right, this next one, y'all try to see how you do on that one. Now, once you do that one, you'll be done for the day. We'll go take a nap or eat lunch, whatever you're gonna
We got, wait till
do.
12:45.
Okay, so you've got an hour and 10 minutes to crash.
Use the fuel though.
Yeah, that's true.
It's just that bill that I took, you just,
The bill he took for us
for
hours.
medicine, yeah.
I was talking about food.
Mm.
I got 572, 218. I think I could spend
I think it's just trash, something else. But I just see maybe.
Yeah.
Your AC, I don't know, I've added it 2 times and got the same answer, but it was not that one, so.
Because I did like all the stuff with it, right? Yeah, I'm starting. I think I just put an entry 0 on something. Because I got that about $100,000.
Y'all message me if you get stuck on something or get confused. You're having trouble kind of wrapping your mind around the concepts. I mean, I understand this is not my favorite subject. But once I figured it out, I was okay. It just took me a while to make sense of it. So I understand if you're having trouble. Don't struggle. You got homework to do, so make sure you get it all done.
No.
I don't know, I'll get with you. I'm gonna add your 12 points back and I'll kind of look at what you missed. And see what we can do.
Thank you.
You're welcome.
Small place of work.
It probably makes sense.
It does. It does once you kind of get a hold of it.